Welcome to the Trading Post. On this channel, we discuss trading strategies, how to trade, and much, much more. This page is really for any type of trader, whether you're new and you're trying to become, experienced, you're trying to develop your strategy, or if you're a seasoned trader and you're looking for ways to improve what you're already doing. With that said, today we're going to jump into trading. We have the Thinkorswim app opened, and we're going to show you one of the trades we did based off of some of the information we're looking at. So, disclaimer, this is not trading advice. This is just to help people understand how to use the tools and resources that they have available that are free. It doesn't cost anything to open a TD Ameritrade account. It doesn't cost anything to use the Thinkorswim platform. And lastly, it doesn't cost anything to switch out the tools, the studies, and the resources available. It's a perfect time right now where information is readily available. You just have to be willing to go out and seek it. So let's jump into this right now. So oh, no, we have our Thinkorswim app right here, and we did a trade. Um, we bought three contracts at 126. So let's zoom in a little bit. So this is a 1 minute. This is a 1 minute, 1 day chart. Again, we did a video on how to set up your layout, and these gray boxes represent extended hours trading, and the black boxes represent open 9:30 to 4 p.m. Eastern Standard Time market trading. For simplicity purposes, let's take out the extended hours trading so that it makes it easier. And I'm doing this with you guys on here so that you can see that it's very easy to toggle between seeing extended hours and not seeing extended hours. So this is a 1 minute chart that we have set up. You'll see that the market jumped and the market's been doing really well today. Now, this trade is really for tomorrow, really Monday. Today is Friday. Look, you can see it down here or not. You can see it right up here. Today is Friday, October 9th. And we placed the trade right around the high. And we were very fortunate to get right around the high about an hour ago. And we bought three uh 346 puts at $1.27. So that cost us about $400. Which again, you want to be careful in how much you place in each trade. That's really too large of a trade for what we're trying to do and the size of the account. But um, we feel confident about this trade. With that said, starting next week, we received a request to start the account back at 1,000. So on Monday, we'll look at the balance. Monday morning before the market opens, we'll look at the balance and we'll withdraw any excess so that we're really starting at 1,000 again, and you can watch that progress. So going back to this, we received at $1.26. We used up a lot of our day trades this week. And if you don't know about the day trading rules, we'll do a video on that and make sure that you're not causing your account to get restricted by trading too active. But we don't have any day trades. Otherwise, we would do a simple credit spread just to bring in a little extra income for today. Today is the 9th. Again, we bought Monday puts, but we could easily do later this afternoon. We could easily do a debit spread and bring in 20, 30, $40. But going back to our trade, why did we buy a put? So you see the 1 minute chart, it gives us some good information and it looks like it's moving in our favor, but that's really not enough. It looks like it was kind of on the overbought side, and it looks like between the DMI negative and DMI positive, we bought it right around here. There wasn't any agreement. It wasn't a clear sign. But let's zoom out a little bit. Instead of doing the 1 minute, 5 minute chart, let's do the 1 minute, 5 day chart. Still, there's still that, where was it? 12, 20. Here we go. So right around here again, same story. It's coming off the highs. We're starting to see how it's dropping. We're seeing a little bit more agreement. Now let's go to the 15-day chart, or 15-minute, 5 day chart. Again, it's telling us the same story. The market is continually increasing, increasing, increasing. Um, and this actually doesn't break out of the overbought territory here. So that's actually, and that'd be right around here. That's actually working against us. It's still high, but it's not overly high for a longer term period. Now, 15-day, 15-minute chart. Now, the goal is to get as much information as quickly as possible to make the best decision. So, as we're going through this and we possibly see a trade, we're not getting, we're not getting multiple points of agreement. We have a couple, this and this, on multiple charts, but we want a little bit more. So, let's look at the this is a 1 hour chart for 20 days. Again, I'm just looking for more time to see. And again, it broke out of, broke through its ceiling, and it's well over its trading range for the last 20 trading days. And so that's a good sign that I can keep going, keep running up. So this actually works a little bit against us as we're looking at more. Now, if you watched our first video, we talked about our watch list and some of these positions we trade and others we don't trade. Other positions on this watch list are supporting actors. They help us make decisions on trading our stocks. And so this right here is our short-term volatility. And we're taking a look at this, and it's telling us a very similar story but in a different way. And this is where we felt really comfortable placing that trade. There is an inverse relationship between VXX and SPY. Now, it's not always the case. There will be some times where they both move up. But when we saw this, we talked about it and we said, this could be a great trade for us to capitalize on. Now, there's a lot of news, and we have to be careful to avoid the landmines that news can produce, from the stimulus package possibly being upped and approved. If that happens, the market will take off um, over the weekend. But it was worth the risk, especially since we had the profits. Now, if we didn't have the profits we had made this week, we would likely, and let's go back to SPY. And if you don't know how to link the charts so that my watch list is connected to everything, it's right here where you see these numbers. Um, but and it's starting to fall a little bit back down as the market's starting to creep back up. And that's okay. We're not looking to sell this position today. We're looking for a strong movement down, maybe a couple of points on Monday. Now, going back to what we were saying, the VIX is extremely low. Not extremely low, but lower than it's been in the last 20 trading days. Substantially lower than it's been in the last 20 days. And that's only happened over the past day and a half. So combine that with the S&P 500, or the spider, starting to push outside of its average. and these are the Bollinger Bands, starting to push outside of its average, starting to look a little overbought, we felt comfortable placing this trade. And again, we wouldn't be placing a $400 option trade for Monday if we didn't have the profit. If we were just starting this account out, we would have only done one trade, one option, 12% of the account. I don't see us doing 25% of the account in one trade where we don't have a recourse. We don't have time on our side. Meaning, what if it goes down Tuesday? Well, these options expire Monday, and that's the risk you run. So we have to be very careful. What about why didn't we just do a Wednesday call? Well, the Wednesday call is 226 versus that's the wrong one. 226 versus 133. So if we do the math on that, that's going to be an extra $100 that we have to spend. And that's about 75% of the position at current prices. So yes, it may be worth it to get that extra time, but this is a decision we made. You may decide, hey, we're willing to spend that extra 200 extra $100, increase our cost 75% for more time. With option trading, there is this balance of time value versus intrinsic value, and trying to find where the premium of those options and that time value makes sense. The reason, and we'll tell you our rationale for it, the reason why we didn't make this trade for Wednesday and we did it for Monday is if a stimulus package is approved or there's great news about the stimulus package, positive news that moves the market over the weekend, then the market's going to have another jump and it's going to render these drastically down. We'll lose more than 50% of our value in these positions. Now, if that happens, these positions will drastically lose. Now, because they have a little bit more time value in it, there'll still be, a substantial amount left, but we just didn't feel comfortable taking that risk. The market jumps 3 or 4 points on Monday, this will really get hammered. And then we have to make a decision, cut bait or ride it out, because two contracts is going to be $400 at the current prices. So that is the reason why we're making an event driven play. It's risky, we understand. We set our targets and our parameters, and that's how we move forward. I hope this video was helpful. Comment below, subscribe so that you're notified when we do have more videos like this and above. We're currently working on a introduction to options video so that you can understand what we're talking about when we're talking about options, talking about creating calendar credit spreads and more. Thank you. Enjoy the weekend and see you next time.